welcome to another video session with Bullionite. Thank you for joining us. Today, I'm going to continue with the series where we are analyzing the major markets that were affected by the significant fundamental events that have unfolded in the last couple months, okay? And if you've been watching our series, you'll know that we started out with a general video about the major fundamental events that have unfolded, and then we've dissected markets that have responded to that in a significant fashion. So we did a video on gold, we did a video on crude oil. When you get a chance, please watch that. There's some very powerful information there. And now I'm going to look at another major group of markets that have responded significantly to these fundamental events. And I'm sure most people are exposed to these markets, and this is the equity markets, okay? And in this video, I'm going to go over the three major equity indices, which I'm going to go over the S&P 500, I'm going to go over the NASDAQ, and then I'm going to go over the Dow Jones, okay? And just as our normal way of analyzing the markets, we're going to look at this market in terms of the daily chart, the weekly chart, and the monthly charts, okay? And then we'll look at like the behind the scenes feelings of what's going on and how these fundamental events are affecting this market. Now, here's one thing I want to say before I get into the charts, okay? In my opinion, all of these equity markets, the S&P 500, the Dow Jones, the NASDAQ, which are the major equity markets, I feel have come to a place where they have become extremely volatile. And what I mean by that is that they're exhibiting what I call kind of this bad volatility. So here are two truths that you have to understand. One, most people are in these equity markets right now. We know that, right? Whether it is through your IRA, through your investment accounts, through your stock account, you're exposed to this. If you have made a significant profit and you've been part of this long multi-year bull run, it is time to start thinking of how to protect yourself simply because of all the fundamental events that are unfolding and what is coming up, especially with an election year coming up next year. Okay, so that's why I think I'm going to do a few videos, like a video series just on the equity market so you can understand this. But it is an overbought market, right? It has gone up for a significant period of time. I am not saying that it's going to drop significantly. I'm not saying that you can't make money in that market. What I'm saying is that there is a higher probability of it coming down significantly, like the stock market, than it going much higher from here, okay? And because of that, it makes sense to protect your profits or protect yourself from taking losses. That's important. Now, let's look at the charts. Now, first, what I'm going to do is I'm going to look at the charts, and then we will take on each market and then switch the charts. So first of all, we're looking right now at the Dow Jones. And I'm going to give you a layout of where we are. We're looking at the Dow Jones right here. It is a daily chart. We're looking at candlestick charts because, you know, as I've always said in my videos, candlesticks give the best representation of price action and therefore allowing you to take the best decisions when it comes to whether you want to go into a market or get out of a market, right? Or whether you hold on to a trade. Now, here's what's interesting. When you look at the daily chart, you can see that it is very choppy, very volatile. Look at this. Look at this. This is why people are having pain. They can't sleep at night, you know? You switch on the news and one day the stock market's down 400-500 points. The other day it's up 400 points. It has gone from a trending, beautiful, normal, good volatility market where you have lots of opportunities to make money to a place that it's just gotten to a very bad volatile place, to a place it's making you think, what am I doing here? So here's my rule. You don't have to have arrogance or ego. Just listen to the market. When a market begins to behave like a 2-year-old child, I've even done a video on this and we'll do more videos. What I mean by that is it's just going crazy. I mean, I have kids. I know how 2-year-olds are, you know. When a market begins to behave like that, it's time to protect your money. And it's time to look at, hey, am I in a market where it has become, you know, it's too stretched, okay? Now, what you're seeing on this chart is places where it shows you that it wants to go higher, right? Like this. And then suddenly, because of the fundamental events that unfold, it gets hit big. Hit big. Now, here's the thing. We don't have, like if you take an average investor, right? Yourself, anybody, you don't have enough people around the world to know exactly what's going to happen everywhere in the world. So what you need to understand is how do you study price action in order to determine how to protect yourself or to profit from the markets. So this price action is telling me it's very finicky. Whenever Trump says something about the trade war, bang, the market drops significantly. Whenever China does something, it goes up again. Or whenever China just devalued its currency, it didn't know what it was going to do. Now, the election is coming up, more and more fundamental events are going to get stacked up, so it's going to get more and more volatile, right? Now, here's another interesting thing that we're seeing. You go to the monthly chart. On the monthly chart, you can see that it's struggling up in this area. And if you really look at it, in the last year and a half, to almost 2 years, it's really not gone anywhere, okay? What do I mean by that? Don't let the market, or don't let people fool you, okay? Let the market tell you what it wants to do. For example, right here, okay, if I draw this box, you'll see, and I didn't draw that box correctly, let me draw it again properly, right here, okay? You'll see that that's about the first quarter of 2017. And we're now past that in 2019, so it's a little over 2.5 years. The market has done nothing but go up and down inside of this range. Do you see that? Between 28,000 and 24,000, 28,000 and 24,000. It's not a trending market. Whereas, for example, here, if you take this area, this is a trending market, where it's gone from 16,000 or 15,000 all the way up to 25,000. That's a healthy market. Somewhere here, trending market. You see that? But here, it's clearly showing that it's just doing sideways, sideways, sideways. Now, sometimes, yes, it does break out of a sideways and go higher, or break down from a sideways and come lower. So that's what you want to protect yourself from. Like if it decides to break down and close below this area, the 24,000 area, it can take a significant correction. Okay, so you want to watch out for that. The next thing that I want to do is I want to switch this market. Now, I want you to also see something. S&P 500, the NASDAQ, the Dow. If you put the charts on, they all look the same. The daily, the weekly, the monthly. The only difference is the numbers. That tells you they're all correlated, right? And they all are moving the same way. Now, obviously, one is probably a little weaker than the other, and we'll look into that as well. For example, maybe the NASDAQ stocks, the technology stocks might take a bigger hit than the Dow stocks. We can look at that. But overall, the stock market is extremely volatile and is in a place where it hasn't really gone that much anywhere except in a sideways range, you know? So let's change this chart to the NASDAQ. And you can see here, I'm going to point out quickly, this is the NASDAQ right here. This is a monthly chart, which means at the bottom you'll see years worth of data, right? And you can see how it went up significantly. And again, in the same time period as the Dow, it is trading sideways, okay? So this is something I want you to understand. Like, let's say if I covered the word NASDAQ and I covered like where we're looking at, and just you looked at this chart, you'll be like, that looks like the Dow chart. That looks like the S&P 500 chart. Yeah, that's the problem, okay? So we got to watch out for that, because all of them are up there and all of it is showing this enhanced volatility. Now I'm going to change this into a daily chart, and you can see again how volatile and how similar it is to the Dow, how similar it is to the S&P 500. That means they're responding in the same way to these major fundamental events that are coming up, right? Then I'm going to now take this and I'm going to change this into a S&P 500 chart, and you'll see the same thing. See? Absolutely, it's so amazing to actually look at this. It looks very similar to the other two charts that you looked at. Massive volatility, you know, and now going nowhere, right? And then every day it gives you this kind of weird feeling. If Trump says something, what's going to happen? If China says something, what's going to happen? Now, let's look at something that's very interesting. If you go back to the Dow, and you'll see, if we go to, you'll see some major support areas, okay? Whereas it's gone down to this 21,000 number. If it kind of breaks through this area where, and let me just draw this out here, this kind of support zone in the 24,000, you could have another big drop down into this area, okay, which it can go from 24,000 to 21,000 very quickly. Also, if you change this into a weekly chart, you kind of get an idea of how deep these corrections can be, because the support levels are so far away in the 18,000 zone right here. You see this? And that's something that's a little worrisome if you're in the equity markets. So this is why I started out the video saying, if you're in the stock market, if you're in equities, and if you've been in it for a long time, look towards protecting yourself. Look towards going into markets that have a higher probability of actually giving you profitable directions or profitable trades, rather than being in a place that is so choppy. Okay, now we'll analyze the equity markets more, but I just wanted to show you how finicky and how volatile they've gotten because of the fundamental events that have unfolded, because that was the purpose of the video. How are the fundamental events that we talked about, Trump trade war, the US trade war with China, China devaluing its currency, the Federal Reserve reducing interest rates, and then the election year coming up. How are these things affecting the markets now, and what could happen going forward? This is just a basic idea, and we'll build off of that, okay? Well, until next time, happy and successful trading.
Content is for educational purposes only. This is not investment advice from Bullionite LLC. There is always risk for substantial losses in investing and or trading through any financial instrument with or without this or any other type of advertised product. Past performances are not indicative of future results. Different types of investments involve varying degrees of risk. Specific strategies or education presented by Bullionite LLC and its associates in this video are for educational purposes only.